The S&P 500 surging above 1,000 again as the recent market rally pushed that index through what was perceived to be an important psychological barriers. The chart going back the past week here, there we were with that big move on Thursday. Here we are today down 3 points. How do you play this milestone, especially with exchange-traded funds? Joining us is Tom Lydon. He's editor of ETFtrends.com. Tom, welcome back.
Hi, Bill.
You can play the whole market or you can play sectors of this market using ETFs, right?
That's right. Well, the granddaddy of ETFs is the S&P 500 SPDR. Back in 1993 it started, but it's cap-weighted, heavily weighted to large caps. Ridex has an equal weight S&P 500, RSP, which again, during periods when we're coming out of recessionary times, small and mid-cap stocks tend to do better. So where the SPDR is up 50% off of that March 9th low, the RSP is up actually 71% for that period of time.
But you're taking more risk, though, at that.
Well, you're taking more risk, but we've seen small and mid-cap stocks continue to outperform large caps over the last 10 years. And I think with ETFs, especially today, you can really pick your spots. So it's nice to have balance between all asset classes.
Tom, who's using these ETFs right now? We are hearing that ETF assets are hitting all-time highs. A lot of folks talking about the fast money using them as trading mechanisms. Are they safe still for the average investor?
They are, Rebecca, because they represent the underlying holdings. So like in the S&P, they represent those 500 stocks. But there'll be some more specific, like single country or commodities that have gotten some attention. Obviously, leverage and inverse ETFs have gotten some attention too. But the bottom line is ETFs across the board are doing what they're supposed to do. They have a tremendous amount of liquidity for a very small price compared to mutual funds.
We should point out, you bring up the liquidity issue. Certainly, we probably want to look at ETFs that have a lot of trading going on in them rather than ones that are less thickly or more thinly traded. How about what if you want to dive down into a sector in particular? What are some ideas that you have?
Well, some of the moves off of this low most recently has been industrials, materials, energy. But again, I have to warn people, the commodities don't always correlate, as we know, with the general markets. But some of these areas, energy, commodities, the big boom in the emerging markets, have really boosted these stocks and the underlying holdings. So beware. I think the key is, since we're above the 200-day average in the S&P for the first time in a year and a half, use that as maybe an exit strategy. If we happen to go below and you're putting money in now, that might be the time to pull the plug.
Very good, Tom. Thanks. Always good to see you.
Thanks, folks.
Appreciate it.